We hit a number this last month that really got a lot of people's attention, $22 trillion in national debt. And we're adding to it. Your forecast for the budget deficit is we're going to hit $1 trillion a year soon?
That's right. And by about 2022, we're going to hit that. To the degree that's a magic number, we're going to hit that number, and it'll stay above $1 trillion under current law.
Now, let me ask what that means. A couple of years ago, the Tea Party said it means the ruination of America. Jay Powell was very strong this week in saying our fiscal house has to be put in order. But we don't see market interest rates move. So does it really matter that we have such large deficits?
Well, I do think it matters. I do think it has an impact. One of the starting points is the flexibility going forward. You know, we've just had growth of almost 3%, and yet the deficit grew by $800 billion last year. And so one of the things that's going to happen if we go forward, when this stimulus starts to wear down and we have some rough patches, we're going to have some impact on our flexibility to deal with that, whether we're able to stand the increase in the deficit going forward. And of course, interest rates are a big impact. The interest cost of the federal government is increasing. It's going to become a bigger and bigger part of the federal budget going forward. And that's just a real issue. Not to mention the financial aspect of things.
Well, the administration argued, as have previous administrations, that you can grow your way out of the deficits. Well, we had 3.1% quarter-over-quarter growth rate in 2018. Can that be sustained, and can that help us grow our way out of the deficits?
Well, as I mentioned, we just had 3%, and the deficit just increased almost $800 billion. But we also think the growth is going to taper off. We think that we're experiencing some stimulus right now this year. Next year, it's going to fade, and we're going to actually have output grow at a much slower pace going forward. So we don't think that the growth is going to be that strong. And second is how much impact can it have? If growth is stronger, it'll help, but it's not going to solve the problem. The problem is just too big to grow your way out.
Well, the other argument was that by reforming particularly the corporate side of the tax code, you would unleash capital deepening that would then raise productivity and raise our potential growth rate. Do you see signs of that happening?
Well, we see signs of the stimulus. You know, we really did, when we estimated the Tax Act, we really did decide that was going to have a positive effect on growth. And we'd have GDP being, 0.7% higher over the next 10 years. That's not trivial, but it's also nowhere near enough to stimulate revenue and sort of have the Tax Act pay for itself.
The administration's latest, the Office of Management and Budget, is going to be putting out a budget soon that suggests that we're going to see 5% reduction in non-defense discretionary spending, but they're going to increase defense spending a significant amount by using what people would call a slush fund, overseas contingency operations, off-budget money that was used to fund wars in Iraq and Afghanistan. How does that affect the budget outlook for the U.S.?
Well, we include the overseas contingent operation in our estimates and our forecasts going forward.